All right, good afternoon, folks. Hello, hello. I'm gonna try to do a quicker one today. I did not get any sleep last night, so pretty beat. But let's take a look. No excuses. We still gotta trade. We still gotta make some money. Still gotta be up early doing our work. Yeah, I was at a concert last night, but then I got home and just could not sleep at all. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. And there is the position disclosure. More or less the same. I got some Futu short, some Yin short, some Tiger short. Futu is very small. Tiger is small to medium. Yin is medium-ish, which is probably got me slightly uncomfortable to keep that size, especially without. That's the only one I didn't have a profit cushion in today. Also, overall with these Chinese stocks, got a really big profit cushion in them from the way that we've been able to trade them. They've been giving phenomenal trading opportunity every day. Those Chinese stocks, lot to do there. Been keeping me really busy. I traded like an absolute boatload of that Tiger today. I got like a ton of it, and all these names really, but especially that one. So they're definitely keeping it exciting. We'll talk about that in a second. Let's start by talking about the indexes. I know that the indexes had a weak move today, and I feel like I barely looked at it. We got to keep in mind that SPX 5600, that's the level where we could really start to trigger some selling leading to more selling. So we got to keep in mind that 5600. SPYs closed down 0.9% today. The Qs closed down a full percentage point, and the IWM closed down 0.75%. So really weak afternoon session. We closed fairly near lows. So this market continues to be what I keep kind of saying, which is not giving any conviction for bulls as far as I'm concerned technically, but also not really confirming any degree of a major breakdown for these SPYs or Qs. And today was kind of another day. And you could actually argue that we're really just in a medium term bullish consolidation. And it's just only a matter of time before the market wakes up and goes. But there's just been no conviction to the upside. Even on Friday when we had that solid non-farm payrolls number that boosted the market up initially, we traded down back below the starting point, which was about SPY 570 during the day. But then we closed on highs, but it didn't feel like a strong conviction close to me, even though we did close on highs. And you could argue that Friday's daily candle is almost like a continuation doji to the upside, setting you up for continued action higher. And then today, kind of confirming my thought process, at least with the action that we saw on Friday, we gapped down. We got below 570, which again was that starting point from the non-farm payrolls number on Friday. And we closed weak. We closed below 570, but still above support. So the shorter term support that I'm looking at for these SPYs is it's the low from, what is that, Wednesday? 565 spot 27. And you got the 21 EMA is just above that now. So if you can get the market to get below that 565, you'll be below the 21 EMA, you'll be below 565, and then this market might give you the moving average crossover, and then we might trigger the 5600 SPX, and that all, I think, could lead to a much larger degree of selling. But at the same time, it's like I've been also saying for over a week, you actually need the market to trigger down. Whether that just happens because of a technical break or that happens because of a news event. We've got the CPI on Thursday. Non-farm payrolls on Friday, if anything, did the opposite. It seemed like we were getting close to potentially going for that breakdown, and the market got saved by that number on Friday. Can the CPI save this market again? I don't know. We will see on Thursday. and then immediately after that we'll be kicking off earnings season. So there's a lot of excitement to come. But as far as I'm concerned, this market has not really been able to give that upside confirmation. It also hasn't broken support. Qs look the exact same, and the IWM, that's waste management. The IWM, did Russell close below 218 today? Yes, it did. IWM closed back below 218 today, but actually gave a decent tail off of its low. That low came in at around 3:45 p.m. Sorry, 2:45 p.m. And then we rallied that last hour and 15 minutes to give you this kind of downside tail in the Russell that the Qs and the SPYs don't have in the same way. At the same time, though, the Russell's the one that's, kind of closed back below support, in line with where that 21 EMA is on the daily. So yeah, bottom line, it's the same picture here in a different way for our market. We're waiting to see if we break out or break down, and we're waiting to see if a catalyst is required to do that. And just, for me, I keep talking about it. I'm really trying to keep in the back of my head some of the failures I had. Maybe failures is a harsh word, but things I could have done a better job of earlier this summer when we were able to start breaking down and break through some of those CTA trigger levels that begin to force more systematic selling. So that's what I'm keeping an eye on. Yet the market, even as it stays in these levels, has given us a lot to trade with China. The China trade has been there. It's been keeping me really, really active as we're not quite at the beginning of earnings season yet. And we've had an SPY that's been broadly consolidating. Boy, oh boy, these names have given us something to trade. Yin with a strong close. Yin, which is a 3x levered ETF, up like 12% on the day. Really should look at FXI. FXI up over 3% on the day. FXI just continues to move higher. I keep kind of going back to the same names each day, and the playbook has been the same, and the way it's been working out is for the most part been the same. It's like we gap up. I short a basket of these stocks to some degree of aggressiveness, and certain days have been more aggressive than others. Generally, though, I've been trading it with a game plan where I have not been having big daily chart targets. The trade has been more of a day trade for me because I'm really a China bull. I am bullish on China, but I believe in extension, and I believe in technicals, and the trade every day we get a gap up and extreme extension has been to look for the short-term short as far as I'm concerned, and it's been working really well. You get the pull. I mean, today was once again the exact same. You can look at the intraday price action. This is what we're seeing like every time. We get the big gap up, we get early weakness, and then we get like a strong close. I feel like it's just happened on a lot of these days. That was this day also on October 2nd. We had that really big gap up. That was the first day that I was coming in and doing some big shorting. Had a pullback to red, and I'm just using Alibaba as an example. A lot of these charts look similar, and then a strong close. The next day we gapped down, so I didn't do anything at the open, but at a certain point in the up move, I started shorting a couple of these things small, and I think I closed them out by the close. Then on Friday, it was the same thing. It was a big gap up, lows break, not as much follow through on Friday as there was today, and as there was on, I guess that was Wednesday, but a little bit of a downside move, and then no follow through, and then again, big gap up again this morning. So that trade's been the exact same every day. Short the gap up, don't be too greedy, don't look for a move to the ADMA on the daily chart, just look for a move. For the most part for me, I haven't even been looking for full gap fills. Like today when I shorted BABA pre-market and then a little bit more off the open, I was just looking for a move down to 115, and that worked great. In JD, same thing. I really was just looking for a move to like 46, a little bit more than the gap fill, and worked great. If anything, my complaint today was I wasn't as aggressive enough in JD, and I was too aggressive in Yin, because this Yin, this is what is really blowing my mind with how this Yin trades. Today was the first day that I finished with negative P&L on it on all these handful of days that I've traded it. P&L's not too bad, negative a little bit, more than made up for by the positive P&L that I have in the other names. But it seems like this yin holds up so much better than Alibaba and JD, and I know, again, it's FXI, and I know that is a whole bunch of companies, but 2 of the 5 biggest holdings are Alibaba and JD, so you would just think that it would move more with those. And it just is not at all. Look at how this FXI held up for 45 minutes before having a grind lower, never filling the gap, never going negative. My target in this was also just a gap fill today, just to move down to. I think I was looking for a little bit over the gap fill, maybe 35.50. With the daily chart extension, I thought that was not being too greedy at all. But again, goes sideways for 45 minutes as, Baba is a lot weaker, as JD especially is a lot weaker, goes red really early. You can look at like a PDD that was trading kind of wacky but was also red. Baidu, I guess this Baidu actually a little more similar to FXI, but when it broke harder and was able to go red. These names are just holding in really, really well. And then into the close, when a lot of them are just kind of working their way back towards their high. Like Baidu had a great full V-bottom turnaround, closed near its high. JD worked its way back towards its high, didn't even quite get there. FXI is absolutely blowing out its opening high and going to new highs. That's kind of been my one frustration when I've been trying to trade this yin. So we'll see. As far as tomorrow goes, tomorrow's going to be a really interesting one tomorrow morning on how these things gap. Because this will be the first day that mainland China is back open. We've had Hong Kong open for most of the days. I think it was closed on 1 or 2. But I think tomorrow is the first day that we get, and someone correct me if I provide any misinformation here, but I think tomorrow's the first day that we get Shanghai and Shenzhen like exchanges, mainland exchanges, back open. So we'll see how that impacts these names. I kind of could see 2 different things happening here. It's really interesting that all the stimulus happened right before the holiday week, which I guess the government did that on purpose to try to spur spending during the holiday week. And we saw a statistic this morning, I think Jim posted, that year over year spending for that holiday week is up like 140% or something like that. So I guess whatever they did the trick. But all the Chinese retail people, if they didn't get in their stock purchases on the couple days prior to the holiday starting, they're just sitting on the sidelines, still potentially wanting to come in and chase the market. So I don't really know what to expect. Tomorrow's gap will be interesting with this FXI because it could be that, and again, knowing that, I don't know the exact statistic, but the Chinese market's like 80% retail, 20% institutional, whereas the U.S. market is like 20% retail, 80% institutional. They're kind of opposites there. So the Chinese market, as a result, tends to trade a lot more emotionally than the U.S. counterpart does, just because of the amount of retail folks that are in there. And it'll be interesting to see if the up move that has happened in this Chinese market since the Chinese market has technically been closed is a type of situation where it's just been getting bought up in order to dump into the dumb money that then chases once it finally opens, or is that retail money that's just, itching on the sidelines to come in and buy, just overwhelm the selling and cause a really big gap up. I could really see both things happening tomorrow. I do think that if we get another really big gap up, that it's the same game plan tomorrow. Short the gap up, don't be too greedy, take the day trade, book your profit. Keep in mind that a lot of times this has been rallying back up into the close, so if you want to play with the house's money a little bit like I have been, fine, but make sure you don't give it all back either. So same game plan on the gap up. But I decided that I did want to keep a little bit more exposure tonight, just in case it's the actual opposite. We get the gap down, just because maybe enough of that retail buying was able to get in before the holiday started. I really don't know. And then they're excited and they sell some stock into the up move, or there's a chance that some of the institutional money that's been able to buy up these ADRs and everything tries to dump into retail buying demand tomorrow, something like that. So I really don't know. I could really see this market gapping big in either direction, and that's why I decided to keep a little bit more short exposure with these Chinese stocks than I have so far. For the most part, they've been day trades. I did keep over the weekend some Tiger short, which was a little bit scary when that gapped up as much as it did this morning, but I was able to manage that really well. Tiger is my greenest P&L name on the day today, actually, and I kept like very, very small Futu short over the weekend. That was it. Tonight, I'm keeping still very, very small Futu short. I'm keeping about a quarter of the amount of Tiger still short that I had last night, that I had over the weekend, just because I got a good move. I made a lot of P&L in it, and again, just all the uncertainty. But I'm also keeping, like I said, like a medium amount of this yin. So we'll see. I did close out BABA and JD though, because I was like, do I really need exposure to the 3x levered ETF and two of the most major components of it? But based on how yin has been trading versus BABA and JD, I almost wonder if I'm in the wrong name. if I should be keeping JD and BABA, but it's weird. I wonder that FXI strength that I was kind of complaining about just before compared to BABA and JD, if that is related more to the other components in FXI that are not tradable right now. We know that Alibaba and JD have been tradable every single day. There's probably some components in FXI that are not, and maybe that's the reason why it's held up better. So I really don't know, but that's kind of my game plan. These names have been really, really exciting. I traded an absolute boatload of stock of them today. Did really well with it for the most part, even though I got some negative P&L and yin at the close. The other ones are solidly positive. And I just had to keep a little bit tonight, and that's the game plan for how I'll trade it tomorrow. If I get a big gap down tomorrow, there's a good chance that I'll liquidate the entire yin position into it. If I get a gap up, then I'll average up into it and manage the position off that large amount of extension that they have. So we have an update on Penn. What's Penn doing on that? Anything? Up a little bit. Yeah, so that's all I got. That's kind of where my head's at. I'm happy to do my best and answer any questions any of you guys have. Did China keep me up? No. Well, maybe. I already wasn't getting a good night's sleep. I was up too late. Wasn't sleeping well. And then at 4:30 Eastern this morning, I knew the futures were open, and I knew that I kept, a decent sized position in that Tiger, and I really wanted to see where those Chinese names were. So I woke up, logged in, shorted all my basket of Chinese stocks, went and lied back down in bed for an hour, but never fell asleep. And then I just said, forget it, and got up and made some coffee. So whatever happens every once in a while. I'm glad I traded well, because sometimes when you're pretty tired, it can lead to not trading well. So, from Jerry, is energy and oil clearer on direction than SPY and Qs and Chinese names? Well, I think that the clearest thing on direction is the Chinese names. That direction is up. It's just a matter of with that extension when it ends, right? There's very clear direction in these Chinese stocks. SPYs and Qs we discussed, not as clear. XLE, these energy stocks, look at USO. Yeah, I mean, the direction here has also been up as well. The problem with these energy names is that they're actually also really extended. Energy, that type of sector tends to not trade with large degrees of extension because they're more like value type of stocks. They don't move as fast. They're not really momentum names. So this XLE moving straight up from 85 to 94 in a really short period of time, that's actually a very big move. So I would argue that, there is a clear direction here. That direction is higher. There's also a clear direction with the Chinese stocks. That direction is higher. But the way that I view markets isn't just direction. It is direction in conjunction with variables like extension. So whereas I am actually decently bullish on both, I like XLE long. I certainly like China long. You need to have a setup come in. And when the setup is straight up, meaning that there is no setup, the stocks have been moving straight up, sometimes the better trade is actually to come in on the other side and try to take advantage of that extension. So that's what I've been doing. Hope that helps, Jerry. What are your thoughts on what drove the VIX today? There are many possible drivers. So I don't really fully understand what's going on with the VIX today based on the information that Tate was providing with the gap up in the VIX this morning, because that gap up in the VIX up to, I'm trying to pull it up on my other screen right now, but it's moving pretty slow. Can someone give me a quote on where the VIX closed instead of me trying to look it up? Approximately 21, 22.6, a little more than I thought. Okay. Yeah, so I don't know, and I didn't dive in and do any real research. I thought it was very odd that the VIX was gapping up to 22 this morning, but VIXy, which should be like 3x VIX in some ways, did not seem to gap up nearly as big as the actual VIX did. And I know that it traded higher throughout the day and played a little bit of catch up throughout the day, probably. And I also understand that these products are by no means perfect. But I thought that it was really weird that the VIX gapped up as big as it did without the market gapping down bigger and without VIXy gapping up higher. And I wanted to see if I could do some research on that throughout the day, just to find out why there was no seeming confirmation from the VIX ETFs or ETNs and the market itself. But I'll be honest, I just never got around to it because I was too busy trading. But I thought that was weird, to be honest. I mean, and then what happened during the day, just looking at this chart of the VIXy, or looking at the chart that Tate posted here of the VIX, the market broke down at 2 o'clock, and the VIX broke up at 2 o'clock. So the intraday price action made perfect sense to me. I just felt like the market itself should have gapped down more, and VIXy should have gapped up more based on what the VIX itself was actually doing. So, and again, I know these products can be pretty convoluted sometimes in both how they're formed and how they trade. But I never really did any more research on it beyond that. I mean, one thing I've spent a little bit of time talking about in some of our meetings is with the SPYs near all-time highs, even just $7 below all-time highs with the SPYs, or even like yesterday, on Friday, the SPYs were a hair away from all-time highs. Like, you would think that the VIX would be down at $4. That's $14. But it hasn't been. Why? Probably has to do with hedging that institutions have on in front of the elections. A lot of tail hedging that's ongoing, and the way that the VIX is actually formed is based off of those options contracts. We know that it's not a perfect inverse to the market, and heck, even once in a while it trades with the market. So that's the reason why we've been able to have a SPY pretty much sitting right in front of all-time highs, but a VIX that had been trading at $17, $18 pretty consistently recently, and now today up at 22. So definitely notable. For me, it's just an extra piece of information to not be gung-ho bullish, as I think everyone knows I haven't been. I've been, trying to be bearish, but the market technicals just won't break down and won't confirm the thought process for me. But I'm ready. I'm ready to pounce if I really see that we start breaking through like that SPX 5600 for more of a momentum, shorter term downside move, which I still actually think sets us up for the rally into the end of the year. But that is the main driver overall on why I think the VIX has been trading so strong. But as far as the specific of the degree of the gap this morning versus the lesser amount of gap down seemingly in the SPYs and the Qs, I don't know. I really don't know. And if anybody else has a take on that or has some feedback on their thought process, I'd love to hear it. Yeah, somewhere around that 5,600, Rich. Maybe we'll see an update. Sometimes we see an update on the number on Tuesdays, so maybe we'll see an update tomorrow. But that 5,600 seems to be where also somewhere around there is the systematic trigger, but it's also where I think the gamma that we saw from Miguel Agut at Nomura really switches negative. So we'll see. Maybe it's just a bear trap. What's a bear trap? Cool. Check the YouTube. Nope. Hold on. Where's the YouTube? There it is. From Cyril in the YouTube, talking about the 2:30 breakdown. Was it technical or news? I'm pretty sure it was just technical. I know people were chattering in the VTF trying to find if there was news, but I don't think that there was any news. It seemed like we just kind of broke through some technical levels that loosened us up a little bit. The IWM keeps making new lows. It was relatively weak. What are your thoughts on small caps versus tech? I still would rather be long, honestly, small and mid caps and short tech. But if we really sell down, they'll probably sell everything. So I've been trying to be patient on, therefore, everything across the board. You would almost think through some of the speculation around the big China moves that it could wake up even some small caps and mid caps a little bit. But that obviously hasn't happened, and the chart's been technically weak. So I still like the idea of being short like these Mag 7 names when they're in their blackout window here for their buybacks. But we'll see. SMCI, is it possible to see continuation? SMCI was very strong today. I think there was news out on it, but I missed it. I think it was even posted in the VTF, and I was just trading too heavy to even read it. So I don't know what that news was. I know what happened on the 26th. That was when there was the investigation that was announced. And now today's candle basically negated that. So that's actually very bullish. I would want to know more about what the news was today because, again, I missed it. But a negation of the candle, this high volume negative Maribozu from September 26th is actually very bullish for this SMCI. Could the VIX be pricing in Iran risks? Yeah, you know, the VIX is pricing in, I think, all of the tail risks that exist. And that is geopolitical, that is the U.S. election, that is, I don't know, seasonality, anything else that you want to throw in there that people want to hedge themselves for. That's you know, what the VIX is measuring, right? It's not just an inverse to the market. It's a fear index, right? It's what we call it. It's gauging the amount of worry that people have in some ways by being involved in those hedges that can make it trade at a higher number than it would otherwise. So yeah, the geopolitical situation in the Middle East is another one of those factors. They all add up. But the interesting part will be if nothing happens and the election goes through and, you know, we have a clear outcome, potentially some of those hedges have to be unwound, and maybe that can add to some movement for the market. From Tate, at this point, I think it's election hedging. Yeah. Funds want to be invested, but they are timing the short term to make longer term decision. My thoughts on the VIX trading is elevated post FOMC. This TLT closed under 95. Yeah, TLT. So interesting that this topped on the day that the Fed cut. And the dollar move, yeah, dollar strength is also interesting. And you would think that would actually weaken the China trade a little bit also. It hasn't happened yet. But it might make it a little bit more difficult for the Chinese government to implement some stimulus. 10 and 2-year spread went negative. Yeah, no, I mean, I think, Tate, that your thought process echoes my thought process. The dollar and the TLT are starting to get a little bit extended as far as it being a pretty big move. So I want to see if we can get some sort of stabilization that comes in. But this has become a really big down move ever since we started cutting rates. And that should be viable at some point also. Because the Fed's going to continue to cut. So, we'll see. All right, folks. I'm tripping over my words, so I'm going to call it. Have a great night, everybody. I will see you all tomorrow morning.